Hello traders, Steve Gans here. I'm sorry I'm kind of a hot, sweaty mess here. Just got back in from my jog and I looked at the market and we've got a sell-off going on here. If I scroll over, this is the SPX, so this is the daily bar, and we're down. Well, we had been down almost 1% on the day. So this is the S&P futures, and of course it's been a pretty sizable dive. We broke below this prior low here. So I'm envisioning at this point, we've got Fed announcement tomorrow too, so the market could do almost anything. But you can see from here, the next likely support area is going to be down around 43.40, somewhere in this general range, 43.50, 43.40. So based on tomorrow's Fed news, if the market continues down, that would be kind of a down range that I would anticipate, barring anything unusual. Up range, maybe here in the 4,500 to 45.25 range, somewhere around that as far as upside. So what do I need to look at here? Well, I've got this particular trade, which, as I told you, is one of my favorite trades. And you can see why it's one of my favorite trades. I mean, I put this thing on a few days ago, and since then, I mean, the market has dropped 45.26 down to 40, so over 100 points. My trade's holding up quite well. Now, that said, this trade is up $1,300 at this point, but this trade also now, if we look at the delta, it's positive 23 delta. As you recall, I like to trade delta neutral. I like to be, where the market can swing big, one direction or the other, and it's not going to hugely impact my trade. Now, if the market were to sell off tomorrow down into that, let's see, what was I projecting? 43.30, 43.20, somewhere down in here. That would wipe out the profits that I currently have in the trade. I don't necessarily want to be in that situation. Now, I'm not sure why all of a sudden here we're bouncing up to 4,600. Oh, because I moved my bar there. No, I'm not sure why all of a sudden profit. There we go. Bid-ask spreads are getting wide is my guess. And again, SPX being a big product, the fact that there's a lot of legs in here, anytime the bid-ask spread widens out, I can show much more profit than what I actually have, or vice versa. But anyhow, so what can I do to flatten my delta here? Well, there's a number of different things I could do. I could potentially roll in some wings, roll in 5 wings, 10 contracts, something along those lines. That's kind of a common thing many times that people will do. And again, the nice thing about Option Strat is you can come in here and you can kind of play with that and see what that does for you. But I'm going to show you what I find to be the simplest and the least expensive to do, and that's going to be simply to remove my long call at this point. Now, somebody had asked me in chat in YouTube, what do I do to adjust a long call? And of course, last night I said, I hardly ever do anything to adjust the long call. I simply thin the butterfly tent out as we had started doing, because it started with 30. I thinned it out, locking in some profit, reducing my risk in the trade a little bit, and then I was going to do it some more and some more. And as I do that, that one long call, it kind of holds up to the right side. So if the market does rip up, that one long call will hold my upside in check and keep the butterfly from losing to the upside. However, in a situation like this, at 200 points away or 150 points away, and my delta getting positive here, it makes sense to look at what happens if I drop out this long call. So I can just exclude it. If I exclude that, look what happens. My delta flattens out considerably at that point. Let's look at what else happens. If I drop that out, my theta is at $227 a day. That's positive theta that, in theory, I'm making if the market just stays around where it is. If that long call is in there, you'll see that that's going to drop considerably because that long call is decaying. So basically, I can achieve two key things here by simply selling out this long call right now. And again, those two key things are I can dramatically increase my theta, almost double my theta, and I can neutralize my positive delta. So those are the two big factors that I wanted to try to achieve. So I want to achieve those in the least expensive way possible, commission-wise. And again, that least expensive way is simply going to be to come in and sell this particular long call. Now, I am losing money on this long call. Let's be clear here. I paid $49 for this. I'm now going to sell this at around $27.20, somewhere in there. So I will have lost about $2,000 on this long call. However, my butterfly has made good money. So the combination of all of these different positions right now total $1,145 in profit. But again, this particular long call itself has lost money. So let's sell to close this. And I'm going to say that I got right between the bid-ask spread there. So sell to close. So now that is closed out. And you can see that my delta, it's going to bounce around there, but a -5 delta or so is perfectly fine. And then positive theta, my theta doubled in that process. My P&L is still essentially the same because that loss was already baked into this number. So, the fact that I realized it or closed it out is somewhat irrelevant. It's part of the overall mix of this trade. So I feel like right now I may be a little better positioned for whatever the Fed might throw at us tomorrow. In the ideal world tomorrow, because I'm slightly negative delta, maybe there'd be a little bit of a further pullback. That might be good for this trade. If the Fed says something and the market runs up, now I'm in danger of losing a little bit to the upside. But let me show you something. So if the market rips to the upside, that would be a little bit of a hurt for me if implied volatility also stayed up. But generally speaking, what's going to happen when the market goes up, volatility will drop. So let's just say volatility drops a couple percent. Volatility's up 5% today, by the way. So let's just say 2% of that volatility drops back out. If the market stays right where it is, I'm going to be in great shape. If the market moves up, I'll be in good shape. If the market moves down, not going to hurt me too bad. So again, if the market moves down, though, I need to keep that in mind too. If the market moves down, volatility is likely going to increase a little bit if the market sells off. So I could be giving back if there's a big sell-off. That could negatively impact this trade, even though I'm carrying some negative delta right now. But usually after a Fed announcement, regardless of what happens, market goes up, market goes down, usually there is a little bit of a release of volatility at that time. And if the same holds true tomorrow and we get a little bit of release and volatility, that's going to favorably impact this position. So that's what I'm looking for. Again, as a delta neutral trader, I tend to focus not so much on the direction of the market, but I like my trades to be able to benefit from volatility shifts, predominantly with butterflies, a decrease in volatility, and time decay. This $206 a day, that again, that's a theoretical modeled number, but that is going to drip into my account as this trade decays over time. So those are the two factors I'm looking for. So this is the next adjustment in the start to finish series on this butterfly with long call. And I probably now need to save that again. And let's see, we'll save that trade, one thin, and then I'll also put on here that I removed the long call as well on, let's see, this is the 19th, 9/19. I sold off long call to flatten delta and increase theta decay. And we'll just go ahead and save that as a new so that we have the original one there still as well. One thin, comma, one call cell. All right, that's going to be it. I'll put this link in the notes below for everyone also. And again, a lot of you are starting to like and comment on these. I really, really appreciate it. So if you got a comment for me, a thought, a question, some of the questions I'd love to be able to get into deeper. I had a specific question about, well, how will I adjust this trade? And there's so many variables in the adjustment that I mean, it would take a 7-hour class on butterflies to teach when and how to adjust to the upside, to the downside. There's about 5 or 6 variations to the upside, about 7, 8 variations to the downside that I consider on a regular basis. And it also depends greatly on how late you are in the trade. Are you brand new, fresh in the trade in the first week or two, or are you in the last couple weeks of the trade? That's also going to vary greatly how you adjust the trade. So unfortunately, some of the questions are going to be a little too in-depth for me to try to address in a response in YouTube. But short of that, feel free to ask questions, make some comments for me if you would. Thank you so much, everyone. Take care.